Hey gang, Akil Stokes here. Welcome back to another weekend trading edge video. It's been a fun packed few days for me. Spent the last few days eating as much as I could, blowing stuff up and enjoying massive amounts of soccer. There's also been some fun stuff happening in the market as well. I think an election overseas, some more Bank of Japan intervention, jobs numbers, and maybe an important shift in monetary policy. But we're not here to talk about any of that. We're here to look at the charts, focus on the technicals, and we're going to do so looking at and talking about. Now, before we get started, do me a favor, hit that like button, subscribe if you are new. I won't give you kind of the whole background, but I was a former stock investor turned Forex trader, money manager. I coach as well. If you want to learn more about me, say if this is your first time watching the channel, just check out the Trading Coach Podcast, episode 000. It should be titled, I hope I'm doing the eyebrow route, right? Who is Akil Who is Akil Stokes? It's supposed to be like interesting face. It's probably bad. But anyway, let's hop into the charts and get started. We're on the beast, aka the pound yen, and this is a very interesting one. Again, there's been some election news with in the UK. There's been a change in leadership, first time in 14 years, something like that, and some new ideas, but no new ideas. It's weird. I don't get into the whole political thing, but I would expect some choppy movement as always when you get election-based news that's happening. But from a technical perspective, here's the interesting thing. So you're looking at this and you say, Akil, we have a beautiful classic chart pattern called a double top, right? Price rallies up here and then we retrace down in an attempt to reverse, and the market says, not so fast, my friend. And we try to extend again, but then the bears come back and say, no, we're holding this level. And then we would expect a move down like that. This is a classic reversal pattern. However, here's what we need to pay attention to, because this is what gets a lot of traders in trouble. It's a great idea for a title for this. Let me just, this is horrible. This is what gets traders in trouble. I got to make it more catchy, like what gets traders in this one thing gets traders in the most trouble, something like that. But the thing that gets most traders in trouble is they focus too much on the what and not the where. So they see something like this, they're like, oh man, double top, right? You go through I got it somewhere back here, the Encyclopedia of Chart Patterns by Thomas Bulkowski. Great read to have if you don't have it in your arsenal already. And you're looking at this thing, you go to double tops, you're like, double top, reversal pattern, okay, price should go bearish this percent of the time. And you're like, let's get bearish, right? And you're all excited about it. But in my experience, and by my experience, I mean I paid a lot of money to learn this, not to any coach or mentor, but to the markets, the ultimate coach. The where is more important than the what, or they have to work together. So a double top is, I don't want to say pointless, but very close to pointless if it doesn't come at the right location. This is why we do top-down analysis and that whole IPDE process, identify, predict, decide, execute, because we want to make sure price is at a level where we're looking for a reversal, and then we want to look for the reason for the reversal first. So if price is at a level that we think it should reverse at, after we have that kind of confirmation bias, then we look for the double top, which is a classic price pattern that says this should reverse. And when the two powers combine, boom, magic happens. But if we look here, and I have this line drawn out just to kind of show you where we're at bigger picture. If we look out to the daily and we go out to the weekly, and let's erase these other two, and I look at this red line, I want you to ask yourself the question, is this red line at any level of importance? Well, probably not, right? You're seeing structure, okay, down here, little ice zone structure swap where we have a previous outside level of structure right here, inside level of structure right there. That's a cool level. You're probably looking at it a little bit higher and saying, okay, look at that. This is a previous outside return. Price came down. We came up here for extending down. That's a pretty good level. But we go back down to where we were actually at. And we look at this thing. And where'd that red line go? Well, it disappeared Because we are nowhere near that level. And again, in a past video, I think 2 weeks ago, we were looking, or maybe last week, we were looking for trend continuation trades on this opportunity because there was like a million pip zone, embellishing a little bit, right? A million pip zone to that next level of structure. So one, I still think we should be looking bullish. Now, there's not a bullish sign here yet unless you took the pullback, right? In order to look for a bull move, we need a fresh break, so a violation of this high and then a retest and a buy and stuff like that. But if you're bearish, this is where I would just look to be a little bit more conservative. And this is where we turn to something called the 2618. It's a more conservative approach to the double top, right? So right now, this can either be looked at as a double top or just a natural part of a trend continuation trade, because this is what price looks like right before it extends, right? See right here. Ooh, double top. No extension. Fooled you. Took your money. Ha 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 ha, right? That's my interpretation of the market, right? I should put like a mask on or something. So in order to be more conservative, we want to look for confirmation. And just how a fresh break would give us confirmation of these highs, or a fresh break of the highs would give us confirmation for a bullish continuation trade. A fresh break of the lows would give us confirmation that the double top has worked. So I would wait for a violation of this level. I would look for a pullback, like your normal pullback trade. In a 2618, technically you want to wait till it comes to the 618, but however you want to do it. And then look to catch that pullback on the way down. I think that's a much smarter and, more importantly, much safer way to handle this opportunity. Speaking of breakouts, we had a breakout of our wedge-ish pattern here on the Aussie dollar. Again, contraction leads to expansion. Boof. We got a good example of here. So now we are in bullish mode, bullish mode, bullish mode. Now, we got a little bit of funky stuff happening over here, but in general, we should travel to these highs, right? So, boring alert, because this is what Akil always does. I'm pretty consistent. I got a good podcast coming out about what to look for in legit coaches and mentors. And one of the things is that if someone comes in, they have like a YouTube channel or whatever, and they have a brand new shiny way to trade every single day, that's a red flag. I got to stop making that face. Someone's going to screenshot and put it all over the internet. And so I say it's boring because you guys know how I operate, right? I look for breaks and violations of key levels. I look for pullbacks. I like to take pullback. It's the cheapest possible place to enter. It's the old stock investor kind of mode in me, right? Buy cheap and then boom, look to sell it high. So we have our violation, which confirms as a breakout pattern. And then a violation of two levels, not only the trend line here, but we did have a violation of the high point. Now, again, we had it here, and then we had to shift it up a little higher, but we ended the week with a violation there as well. Now we're looking for the pullback. So if we can get a little bit of relief here, right? A little bit of relief here, look for that pullback up. And I said I wasn't going to get much into the fundamental thing too much, but just something to put in the back of your mind, right? So what happened with our jobs number is a few things. We had jobs number come out. We had wages. We had unemployment. We had a revision of the last jobs numbers as well. And what we've done is we've continued to shift more towards the idea that there is going to be 2 rate cuts this year versus 1, right? There was like 4 to begin the year, then there was 0, then it was like December. Now it's like we went from 60% to 70% thinking September. I personally still think 0, but we'll see. But what that's going to do is give dollar weakness. So if we get a little bit of respite, maybe people interpret the numbers after they come back from the holiday, and then they realize like, okay, well, we are going to be in this kind of bear dollar type of mode. Fundamentally, this speaks right into that as well with seeing a weak dollar. I don't know what's happening in Australia. I haven't looked at that yet. That's on my to-do list for the weekend. But just to put a little bit of fundamental sprinkle on there, keep that in the back of your mind as well. But yeah, potential bullish opportunity here on Aussie dollar, looking to get up to like 68.50, somewhere around that level. Another breakout opportunity is on the Euro Canada. Now, here's the cool thing. This is what we teach in the foundation course, right? I tell traders that there's a lot of information out there. There's a lot of patterns and this and that and that. But ultimately, and I'm simple-minded, dumb-brained it, there's 3 ways to trade, right? There is a counter trade where you look for a price to hit a certain level and reverse. There is like a breakout trade where something breaks out and you trade it. And then there's a pullback trade where you wait for the breakout, you look for the retracement, like an outside return, and then you get involved. And within those 3 ways to trade, they're sprinkled all different types of ways. So we just saw one with the breakout of the wedgish pattern, right? We have another one here with the head and shoulders, right? A head and shoulders pattern is a classic reversal pattern, just like the double top, where we have the market give us a left shoulder, we have a head down here, we have a right shoulder, or excuse me, a neckline, and then we have a right shoulder. And what we wait for is we wait for the violation of the neckline, whether it's a horizontal neckline, which would be this white line right here, or this blue line, which extends briefly slanted, but pretty much is at the same level. And you can see we have that, which confirms the head and shoulders bottom, and we should expect a move up. Now, if we take all that away, I can easily just go and say, hey, you know what I'm looking for here? Break of structure, yes. Pullback, there we go, yes. Extension up. And it's the same exact thing we looked at on the last pattern. So I'm not saying that understanding these different classic patterns aren't important. They certainly are. The more information we get, the better. But don't confuse yourself too much. At the end of the day, there are 3 possible ways you can trade. If you can master those 3 ways, and everything else is just kind of gathering more clues for that particular situation. So looking for a bullish opportunity here on Euro Canada with the head and shoulders bottom completion. Before you go, like, comment, subscribe, do all the stuff you're supposed to do. I hope you guys have a great weekend. I will see you next week with a new episode of The Trading Edge, and of course, 3 new episodes of the Trading Coach Podcast. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.